Are you an agent struggling to understand real estate economics? Would you benefit from learning how top agents structure their businesses? Then you've come to the right place. And welcome to another edition of the Nerdy
Special
Agent
edition.
Podcast.
Special edition.
Not a special edition, where we teach you the basic economic and business principles you need to thrive in today's real estate market. I'm your host, Luke Pettersen, with my brothers and fellow nerds, AJ and Josh. What's going on, guys?
Feeling super special for this.
I feel like it's a special edition podcast. I don't know what you're talking about. I mean,
It's
we usually release a business tip on Friday, and now we're doing a second regular podcast in the same week. How can that not be a special edition?
It's pretty special. I will say that the Would You Rather is a special holiday Would You Rather of the week. And it is, would you rather have the head elf as your client or Rudolph, the red-nosed reindeer, as your client?
I feel like I would struggle to get a reindeer pre-approved, so I'm going to go with the head elf.
So before, we were talking about this beforehand.
Definitely Rudolph.
Josh said that an animal can't get pre-approved to buy a house.
That's my understanding.
And then he asked,
Fact checkers out there,
and then he asked, does a dog own a house? And I found Gunther, the German Shepherd, in Tuscany or Florida, owns a house because Gunther III, his great-grandfather, inherited a multi-million-dollar trust from late owner German Countess Carlotta Liebenstein when she died in 1992, and the mansion he currently owns is worth about $7 million.
This is far too specific to be fake, too.
It's got to be real.
This is...
And Rudolph has a red nose that lights up. He is far more qualified than Gunther.
Now, I will say this house was purchased in cash, so he didn't have to go through the pre-approval process.
Rudolph has been around for 10,000
I
years.
will also say there is
a
a statement in here that says at least that's what the handlers who manage the estate say.
What do you
So
think
that
Rudolph's
makes me
salary
think
is? What
that
does
maybe
Santa
it's just
pay?
made up.
What does Santa pay Rudolph?
It's got to be a pretty decent salary.
I don't know.
It's only a seasonal job, I will say.
Right, he works like 1 day a year.
Works out all year to get ready for the one day.
I guess.
It's kind of like playing minor league
He
baseball.
leads the way, right? I know.
Yeah.
Well, let's get into the podcast. We don't bore people and get them to click off the podcast.
And just a caveat, right? We are not doing a podcast next week.
We are not doing a podcast next week. This is the only one for this week. We're going to take next week off.
Correct.
We'll see you in the new year.
We'll miss you.
This week, how we wanted to finish 2022 with basically the hottest button topic with interest rates and the consumer price index specifically, what the most recent numbers looked like for November and what that means for the real estate agents listening. I want to first, we've already talked about this. You can go back and listen to other podcasts, but I want you guys to describe the consumer price index, why that matters, why agents should follow this on a monthly basis.
So the consumer price index just is obviously an index that tracks where prices of goods are going, and services too, I believe, in there as well. So there's the headline number, which just kind of jumbles everything in there, and then there is the core number, which I believe removes food and gasoline. Is that correct?
Food and
energy. So the two numbers are different. So the index is just tracking on a 12-month basis most of the time how much things have changed in price. And then we also, obviously, we'll get into the numbers too, but we go into the month to over month numbers too. So how much they changed from last month to this month.
Yep. And it's important because this is the biggest thing. I think we've said this multiple times in the podcast. It's the biggest thing the Fed is looking at when they're determining what their monetary policy needs to look like. So we've talked about the changes to the overnight rate. We've talked about how Powell has looked at the overnight rates as a means to slow inflation, which is the biggest challenge that he's running up against right now. And so what he's doing essentially is evaluating how the CPI numbers are moving and then making decisions on how we need to evaluate interest rates, which then tend to run towards treasury rates, which then tend to run towards mortgage rates. All in all, it gets to higher mortgage rates as we have more increases within these other rates as he makes decisions. So if CPI keeps going up, you can expect to see mortgage rates likely will keep going up. If CPI stagnates or slows or beats expectations, you can tend to expect that mortgage rates will come down. So that's why it's really, really important for you to be following this number. Also, if you own stocks, it really impacts the stock market. So it's another good thing to keep an eye on.
And each month we're going to have an estimated CPI number and then what the CPI actually came out of. And that's why you're saying, is it going to be is the CPI coming out being better or not? Because let's say they expect it to be, this is a random number, 8%, and then it's only 7.5%. That'd be a good outcome for the CPI.
Exactly. So the reality is, similar to any other public company that has reporting and earnings and all of this stuff. It's a very similar measure. This one comes out monthly. Most of those are quarterly. But everyone sets out expectations for what's going to happen, and then they report actual numbers. And the comparison point between those two is the most important thing, is are we going higher than what we thought we were going to, or are we going lower than we thought we were going to? If the numbers come in higher, the Fed is going to look at it and go, okay, we need to actually push harder with our behavior to basically bring this number down. But if the number's coming in lower than they expected, they're going to realize that their expectations or what they've been doing is working, and that's going to result in them feeling like they don't have to put as much pressure on the economy to minimize the inflation numbers.
And the good news for the agents out there is that the CPI is probably the most tracked index in the United States right now, I would say, month to month. And so if you just Google CPI or Consumer Price Index, you will find articles on every single website that covers any sort of politics or economics.
Yeah, but the Bureau of Labor Statistics has actually got where it's all reported. It's also kind of cool because they split things out into different categories. So you can see not only like the total numbers, but you can see food by itself, or energy by itself, or everything minus food and energy. And then you can actually play with it over time. So there's ways to actually run graphs and stuff to see how the numbers have trended on there.
I will say that some of the articles are a little bit easier to digest. The Bureau of Labor Statistics has a lot of numbers that might be hard for people who aren't super into the numbers.
I mean, and truthfully, it's just the headline of the article that you really need to read if you don't want to get too in depth. Exactly. It's like, I just want to understand what were they thinking it was going to be and what was it actually.
And also note that, and I don't know, I'm assuming you guys have been bringing this up with your clients a lot, but I've been asking every single one of my clients, do you know what the Consumer Price Index? Have you been following this? And none of them know what it is. So it's a really good way to instantly be considered somebody that knows more than the general public, because if you're giving them that knowledge that they didn't know beforehand, they automatically think you're the expert, which I think is really important. Let's talk about what the numbers were in November.
Oh, sorry, I'm still reading about Gunther here.
I have them here.
I'm kidding. I can go ahead. Go ahead.
So in November, and it comes out trailing. So in December, they released the November numbers. It was like December Wednesday last week.
Yep.
The estimated numbers were going to be 7.3% in increase year over year, month of the same year last year.
On the headline number.
Exactly. And 0.3% month over month. What they came out being was 7.1% and 0.1% respectively. So they were lower than what they were estimating they would be.
Mm-hmm. That's correct.
Talk about what happened then when that number came out.
So what happens then is the traders start trading, right? So they use their past experience about what Jerome Powell has been saying about what he's going to do, and his signaling, and they say, hey, now that this happened, he's probably going to do things maybe a little bit differently or potentially slow down. So things started moving. They started moving a lot more after the next week, or was it the next day that he got up and spoke? Mm-hmm. And then he says things, and then that also makes things move. So what mostly happened was the 10-year yield started to drop fairly quickly, and that's the yield that usually determines what 30-year fixed mortgage rates are doing.
And so rates were, let's say, before that number came out, were roughly
6.5 to 6.75
before the number came out, and now they're sitting
6 to 6.
Well, they dropped quite a bit, so they were probably like 6.3 to 6.5. I feel like before the number, then they dropped into. This is like good credit, 20% down.
Hypotheticals.
They probably dropped about 50 basis points when the news first broke. Then as people kept talking, what tends to happen is you see a very quick response, like up or down. If it's good or bad news, the response is really aggressive at first, and then within the next 24 hours, I think people tend to digest it a little bit more and listen to him a little bit more, and things kind of come back down to normal. So we have seen rates drop a little bit. They dropped a lot right away, and then they kind of started creeping back up, but they're probably in the low sixes right now.
The 10-year broke its boundaries for the last couple weeks today. It actually went up quite a bit.
But so then something to keep in mind as well for your clients would be that if you had someone looking in September and the lender gave you a price on what they can afford, and all of a sudden you're still looking at houses and you haven't re-talked to the lender and nobody said anything, it'd be a situation where, hey, lender, well, like, what's our new price? What's the monthly payment look like? Because I had somebody that priced out a house 3 weeks ago, and then we just priced it out again. It was like $150 a month difference on what the mortgage payment would be.
Yep.
So it's something that agents can help your clients, and maybe they can get a little bit nicer house too for the same monthly payment possibly.
Yeah, so good story. I had 2 clients that were under contract when the CPI news came out this last week. I called both of them that morning at about 8:30 because the news broke positively. the expectation we were hearing from some of our lender partners was rates might drop as much as 30 to 50 basis points. So I actually called them and said, you should be talking to your lender today about locking your rate in because you are seeing positivity on here in the rates. So both of them actually locked in, and then the next day, numbers actually, because of more news, went back up a little bit. So I think they saved about 20 basis points on where they locked in versus where the rates are today, just by having that conversation with their lender on the day when the CPI news broke and was positive. And so if you want to think about this for no reason other than helping people, if you know what's going on, you can actually help save your clients money for 30 years by just having these conversations and tracking where these numbers are.
$150 a month for 30 years is $54,000. It's a lot of money.
Luke's speechless.
That's a lot of money. So the thing that's cool about that is that pause.
Okay. Yeah, just pause. I'll just clip it.
Oh,
I was
I
gonna
was
say,
like,
Luke
I was
being
so
No, you
confused.
didn't
It's
have
like,
to
what do you mean by
pause.
pause?
No, I just want to bring this down a little bit because I think that'll help.
So
Okay,
you said
wanna
so
say
just clip
something?
at $54,000.
Yeah.
Okay.
Okay.
Can you say something?
Check, check, check.
I was like, pause. I'm
Better?
pausing. What are you gonna do something?
Unpause.
Okay, now
Freeze.
say something.
Check, check,
I
check.
don't want to pause. I want it to call. I want my phone to ring.
Okay, you can keep going.
Okay.
54,000.
So you have to act shocked. Ready? Go.
$98,000.
I'm gonna flip the table. No. That's a lot of money, and like you had said, not only can you be the expert, but now you can actually save people money, which feels really good.
Yeah,
It
that's why
does.
we
It feels
decided to do
great
this in the first place.
and it's going to give you a far better chance of getting referrals. Selfishly, right? And so it's something you should 100% be tracking, and your lender should for sure be tracking it, or at least ask them about it if you don't know if they track it or not. The other piece I wanted to get into is because we have the CPI comes out, and then Powell typically says something, right? I want to talk about the differences in kind of what happens when he says, like, what did he say this last time and what did that do?
He didn't react as swiftly as we beat this as people thought he would, I think.
That's the second time in a row, by the way.
Well, I mean, it's
Every month it's kind of like, yeah, and then he's like, we still have a long way to go.
yeah, it's important
Which is
for him.
right.
It's important for him to say that. I think he's the thing I like about him is he's not super volatile. So he didn't say whoa, I actually thought it was going to be lower than that. He doesn't say stupid stuff like that, and he also doesn't say we beat it, hooray. So either way, he just kind of sits in the middle. He's like, yeah, it's good, but we're still going to keep working on this. And then that signaled to the traders again that, well, maybe he's not going to, slow down as fast as we thought yesterday, or maybe he's not going to lower them. That he gave a terminal rate that was a little bit higher, I think, than what most people were expecting.
And so I think it is important to note that not necessarily be upset with when he says that, but know that he's playing the long game. We're not trying to have rates drop super fast right now, so inflation jumps back up and then we have to raise it again and then stuff goes haywire.
That's what happened in the 80s.
That's what happened.
Well, and considering what's happened in real estate, in the finance markets for the last, go back to 2008, right? A lot of the very greed and aggressive behaviors in the finance world have caused bigger problems because we're trying to push for whether it's economic growth or making money in the stock market or whatever. There's all this energy push behind it, but then sometimes it has adverse consequences. So at least I really respect that Powell's always here's what I think is actually happening versus trying to spin a narrative for political reasons or economic reasons. He just keeps on pushing forward with what he thinks is best, and hopefully in the long run that's going to result in better outcomes for us than, we solved it in the short term here. That's always been my take on his approach.
Well, he talks he says reset. He said that about a few different industries. Said it about real estate. People are like, oh, he wants the prices to go down. And I'm like, no, I actually think what he's going to do here is in the next 6 months, and we've talked about this, you're going to see that the 12-month trailing number is going to be lower because it's working off of a much higher number. And if these monthly numbers keep coming in at 0.1 or 0.2, they're going to get close back to achieving their long-term goal of 2% inflation, which is ultimately what they always have said. So they're going to get there within this year. It's just a matter of how we get there and how softly it all lands. And that's what he's trying to accomplish, I think, is to slow it all down more, but not shock it right away.
And that hopefully will make interest rates land a little bit more solidly, I guess is maybe the right word I'm looking for.
Consistent, even consistent.
Yeah, the problem we've had is interest rates are jumping everywhere, and we've had a lot of clients that are just like, I don't know what's going on here, guys. Like, I can't track this. I don't know where it's going, so I'm just out. Like, so if there's more consistency within rates, I think everyone's going to have more success within the market because buyers are going to have a level of confidence, and sellers are going to have a level of confidence where pricing is going. It's just going to create more like, we know where the market is going now. We're happy to get in the game. If we're playing a game we don't know the rules or we don't know like how we keep score, you don't really want to play that game anymore. But if you at least know the rules, even if you don't like the rules, you're more willing to actually play the game.
And we'd also be lying to ourselves if we didn't all agree that affordability in real estate is not very good right now. I mean, the affordability index number is way too high. And so I think a lot of this should at least help that number come back to earth a little bit.
Yeah, no, affordability, what do you track? Affordability index is like 90 this last month? 90 something?
I didn't see it this last month. That's
Hasn't
what it
come out
was.
yet. It usually comes out mid-month.
What was it last
I don't
month,
know.
though?
In November?
Yeah. It was under 100 again.
Yeah, it was.
So we need that number
I
in
think
the
it went from 95 to 99 here locally, maybe.
Okay. We want that number in the 120
The
range,
market
kind of a minimum.
Different. The big thing in real estate is that the national numbers are not the same as the, especially right now. It's macro really hard right now. Micro, super micro focused right now in real estate, which is make sure you're following those numbers as well. But that's all we have on the CPI index today. We will see you in 2 weeks in the new year, and we might have some more
Happy
CPI numbers in
holidays.
January for you as well. That's all we have for the Nerdy Agent Podcast.
Get some rest.
Happy holidays.
And as always,
Be better.